Hello guys, how you all doing? I'm okay myself, and yeah, I just wanted us to talk about the volatility 75, which is what we had. We've had a couple of setups on this one. Remember when we were here, when we said we are buying and then we are going to exit here and look for selling opportunities from there. Because of what? When we were going up, we had a trend line here which was broken. Let me just show you so that we remind each other of what was happening or the reasons why we wanted to sell. Remember, Varki, how can I put this? The trend line there was broken, and it was broken by what? It was broken by the resistance from here. From this resistance, that's when we formed the move and broke that trend line, right? So it means this is a good selling area. And after breaking all of that, we even taken out what the areas of demand there, or areas of support, which means this area is very much important. So when the price gets back to it, we are more than welcome to execute from there. And the price came back to the base and it gave us buying opportunities. We bought and then we were going to exit there, but this is the main movement or the main direction. And now let's see what the price did when it got there. It got there and then it got rejected, and then remember we had another setup where I said no, because now the price is bouncing from that weekly, and then there was a nice area to buy here on H4, I think, and we said no, we can't take that one because we'll be fighting against what the weekly area of resistance, and indeed the price just violated that area. So now we can see that the price is sort of moving down. So remember, as much as we can say it is going to the downside, it is not gonna oxalayo. This is still an area of what? Of support. So it is not yet broken. So no matter how many times it has been hit, but it will remain an area of what? Of support, and it's on higher time frame. That's why when we hit it here, we said as much as we can say the trend line is broken, this is higher time frame area of support, and the price has higher chances of respecting those ones more than the ones on smaller time frames. But if it was to get broken, it will mean this is the one that is the next area of support, and it has never been touched, this one, so we can expect some reaction there should this one not hold, right? And now let's check smaller time frames. What is it that is happening there? And we can say our trend line was there and it was broken, and then now we are coming for the second we are coming to sort of retest the broken trend line, and we can see that this is sort of the area of support that gave us this move, which broke the trend line. So it's a nice area of support. So now remember, it's more like saying we are buying from daily, going to fight against. Remember, we have weekly there. Remember that weekly is saying pushing the price down. Now here's daily. My question is, are you going to take your risk and take trades from this daily, or are you just gonna say the price is bouncing from weekly, let me just leave it like that? Usually we will say let's just leave it like that, but in this case, this is where it gets interesting. Remember, this daily is not just the daily. This one is not just the daily support. It's also around the weekly. This, remember, I said the price is gonna bounce in between these two up until one of them gives up a one. So now that daily is somewhere around there. Probably somewhere around there. So you can see, as much as it's a daily, it is what? It is also inside what? A weekly. And then there's weekly. So this is weekly versus weekly. It's not like weekly versus daily alone. So weekly versus weekly, anyone can win. That's why we can buy from it. We can buy and sell like this, because they are both on the same time frame. Right? So the support and the resistance on weekly, we can buy from this, sell from that, buy from this, sell from that. If the support was just on daily, we can't fight against the weekly resistance. But in this case, it's different. As much as we're saying there's a daily area of support there, but remember, it is inside what? A weekly. And this weekly is the one that has been holding for a very long time. Remember, it was tested there, missed a bit there, and then now it's tested here. So it is still holding, it is not yet broken. So we can take chances at that daily, which is located at our weekly area of support, or area of support. So on daily, this one, it's daily, yes, and it did what? It broke the trend line, like we were saying. So we can take our chances there, but you need to wait for confirmation. We don't just go in. You can wait for those pin bars or that engulfing, and then just go in. Right? And remember, if we can zoom in, I'm sure you're going to agree with me on this one. Make sure that you follow everything that I'm doing. We started there and went up there and then came down here and then straight move until up there. So you can see that we did have a higher high, meaning we went there and formed a high and then formed a low, and then we crossed to the other side and made what? A higher high, which means our current daily trend line is here. This is our current daily trend line. And we had we got a pause here, and the price is now inside that area. It's there. Price is now inside that area, but remember, this is a daily support, and we are coming from weekly resistance, right? So it becomes a challenge. Remember, if this daily support was inside a weekly support, then we will take it. But in this case, this is not the one that is inside the weekly one. It is still above, because remember, the price has not yet reached the weekly. Remember, the weekly is here. The weekly is there, and the daily trend line, the current one, is there. So this is not the one that is inside. There's that one that is lower than that one, which is what the one we can say we can take chances there, because it is located at the weekly area, unlike the current one. The current one is still far. The current one is here and the weekly is here, somewhere there. So it is still far. Let's just wait. So the current one now wouldn't give it a chance. Let me see, because this is the trend line, this is the current area. So I would rather let's just draw it accurate. I would rather wait for the price to come and touch this one, even though it might challenge the trend line, but I'd rather have it come here, or I'd rather have it come and test what? And test let's use a different color. Come and test this trend line and then give me a pin bars or engulfing. When it gives me pin bars, I can have that buy stop, knowing very well that my pin bars are located at a significant area or at a significant structure. What is that structure? Remember, the structure can be trend line or support or resistance. In this case, because we are looking to buy, a key structure can be what? It can be a bullish trend line. So if we have a bullish trend line and then the price moves like this, when it comes back, if it forms pin bars there at that bullish trend line, we can trade those ones. That's if the trend line is still holding, so at the bullish trend line. Or it can also be at the support. So if there's a support here and then we have pin bars at that support, we can also buy from that. So those are the key areas where if the pin bars form at, if we form a pin bar at the trend line or at a support or resistance, those are the ones that we can trade. But if we have support in the middle of nowhere, I mean a pin bar in the middle of nowhere, we're not going to entertain that one. So in this case, now I'd say, as much as we're inside this one, but it is still far from the weekly zone, because remember, the price is coming from a weekly area of resistance. So I can't fight that weekly with the daily, but I can fight it with the daily that is located inside a weekly. So now it would be like it's weekly versus weekly, so anyone can win. So that's why we can take trades from there. So my final but again, verdict on this one is that we wait for the price to touch here and look for rejection or reversal signs, then we can execute from there. So remember, on H4 there was this is the one that I was talking about, and we discussed this one in the previous video, where I said as much as we were still above here, and then when we touched it there, it was not a good area for us to buy from, as much as the trend line was not yet broken, because of what we are coming from a weekly and this is just H4, guys. So we can't fight that weekly with the H4, and the price broke that. So meaning it broke support, which is this, and then it broke trend line, which is this. So meaning it is bearish. So now we should be looking to sell, and it will be in line with what the weekly resistance. So did we get any signs, any trades? And remember I said when we were still going up, here, I said because we broke this and we broke that, we can take trades from here. If the price had went there, we could sell from there because we'll be bearish. But in this case, it didn't go all the way up there, but it doesn't mean you didn't get other areas where you can sell. Let's check our H1 because we know everything is pointing down. H1, I will show you where you would have had an entry. H1 is moving down, and then at some point it had this short-term momentum to the upside, and that's when you can say there was a short-term trend line there. And this short-term support, they were violated. I'm not sure about this one, but yeah, this one was taken out. This short-term trend line was taken out, and they all started from this move, which means this is an area of selling. We can sell from that because this is the area of resistance that gave us this move, and this move broke this short-term support and this short-term trend line. So meaning this would have been your area of selling. Here you could have sold there, and look what happened. Boom, it went all the way down. That's how you trade. You must just wait for the perfect moment, wait for everything to align with your bigger structure, and then you know that even when you're selling, even if you can lose, but you know what you were doing, you know that you were following the weekly structure. So currently we can see it's just going down. So I would say if it was to come here, maybe you can take a chance there, but remember this is on H1, eh? If the price, I want you to understand me, if the price touches, if it doesn't go to the trend line, if it just goes now to that H1, you can take it, but you're not going to pass this area. You must exit, remember. But if it does something like this, let's say it doesn't go back to your H1 resistance, but rather it comes down here, then it goes to the H1, we are not going to sell. Why? Because price would be bouncing from daily trend line, which is a daily structure. I can't fight this daily structure with H1 area of resistance. So that's how we roll, guys. We can't fight a bigger structure with a smaller time frame setup. But the very same way when we had what did we do? Yes, when we had this one, there was a video where I made when we were coming down, and I said if it comes back before hitting your weekly, then yes, you can buy. But if it goes all the way to the weekly and then come to your demand on that H4, you're not gonna buy. Why? Because now the price will be coming from what? From weekly resistance, which is higher than what you wanted to trade. So you're not going to take that. So it's the same. Apply the same logic here. We have this, and if it goes down to if it goes up to our H1 or H4 area of resistance that looks nice, we can take that and hope that we'll have that final push to the trend line, and then when we get to the trend line, we exit. But if it doesn't happen like that, and you find that the price rather it goes down to the trend line, then it goes up to your H1, you are going to ignore it because it is coming from daily trend line. Daily is pushing the price up. You can't expect the price to react to a H1 resistance and go fight that daily trend line. It can do that, Mara. We want to have odds on our side, higher odds on our side. We're not going to fight bigger structures with smaller setups on smaller scale. I hope this makes sense. I always preach about this, that we can't fight a higher time frame structure with a smaller time frame structure. We always want to make sure that we are trading with the bigger time frame. Right? So I hope this makes sense, guys. I hope this makes sense. So at the moment, the only area where we can look to buy, it's from here. Because remember I said the current one, I hope you remember, I said the current one, as much as it's because the current one, it's a daily one and we are coming from weekly, we can't fight that weekly with the daily. But this one, as much as it's also daily, but it is located inside the bigger weekly, so it will be what weekly versus weekly. Then this we can take. I hope it makes sense. We don't have to always fight the market and always be saying, I want to be in the market, I want to execute, I want. No, we must wait for the perfect moment for us to execute. Price will always, even if it goes 24 hours, the whole entire 24 hours without giving you a reason to enter, you're not going to enter. Because the moment you start forcing trades, just for the sake of having an open trade, that's where you're going to lose. And some of the losses, guys, it's something that you can avoid. Have patience. Patience is very, very key in this trading industry, because if you don't have patience, there'll be those mistakes that you make, and then you'll be like, oh, but why did I execute this one? Just be patient for a day or a few more hours, or or a day or two. Because remember, it's not like you're only trading volatility 75. You can have patience and say, I'm waiting here. While you're still waiting on VIX, and then you find that maybe Nasdaq is giving you the setup, that side is ready, and then you are riding that one in the meantime while you're still waiting this side, or step index, or whatever that you have, or USD CAD, or whatever, that side is ready, and then you are trading that one. You just shift your focus in the meantime and focus on that one that is ready, while on VIX 75 you're still waiting. Don't try and force trades. There's a lot of things, instruments that you can trade. So rather identify the areas that you are interested in taking trades from, and then until the price gets there, you are not going to execute. So you're just gonna put it on your watch list and then focus on something else in the meantime. Then you'll see you won't be making silly mistakes. Even if you take a loss, at least you'll be able to analyze your loss and say, oh, here I got it wrong, it's fine, but I did everything according to the book. We're not gonna win all the trades, but we need to make sure that we always do the same thing. Because the day here you trade like this, tomorrow your day you trade like that. Even if you take a loss, you don't even know where to fix, because what, you're not doing the same thing. But if you're doing the same thing over and over again, sometimes it works for you, and it works more than it doesn't work. Then you know that sometimes you just have to find it here and there. Then you are good to go. But if you don't keep your things standard, you're going to have problems. Just have patience and then do the same thing over and over again. Then you'll see you'll be on the right side most of the time. So things like, let me just show you. These are the things that I like to trade. Volatility 75 and gold. So these are my favorite. Sometimes I do add Dow Jones, which is US 30. I can remember Nasdaq, it's US 100. So sometimes I do add it also, but most of the time I do this, and I do that. You can also add step index if you like. So why? Because these ones, with the concept that I'm showing you, they respect key structures. So they don't have those funny movements that you can't even make sense of. So they respect key structures. They form nice areas of support or areas of resistance, and they react to that, and you can read the structure nicely. So these are the things that I am always trading most of the time. I don't like currencies, guys. I don't like currencies as much as they are perfect for you when you're still new in the markets, because their PIP value is very small. Even if you lose, the loss is always going to be very minimal, because these ones are very brutal. Things like this, they are very, very brutal. They can easily take your 1,000 rands. Why one? So yeah, but as much as they are that brutal, they can even give you 1,000, or they can give you 2, 3, 4, 5. But if you're trading something like, let's say you're trading Euro, USD with the minimal size, for you to make 2,000 rands, I don't know how long it's gonna take you to make a profit of that with the minimum size of 0.01. It's gonna take a very long time. But when you're trading this or you're trading that, you can make that within, depending on how, if you get a movement like this, this is daily. Let's go on H1, right? If you get a movement like this on this volatility 75, or Nasdaq. This can easily give you it can give you 5k plus 5,000. But on USD CAD, you'll never get that. So that's why now I prefer things like Volatility 75 and Nasdaq and gold, because I know that they respect the zones and they pay well. But if you have a losing streak, you're going to feel it. So yeah, I'm gonna end it here, guys, and then all you have to do is just to follow up with this VIX 75 and just see what it does when it get to that that area of support there. That's if it gets there, or when it gets to that daily trend line. Just check how it's going to react to that. Then I'll make another video should the structure change before it gets there. Then I'll just notify you with another video. So you don't forget to like and subscribe there, and then I'll see you in the next one. I hope we are still on the same page, guys, so far. I'll see you in the next one.